Now on to today's market movers with futures and options trades from CME Group.
CME Group is launching Micro E-mini futures contracts. Discover how a smaller Micro E-mini futures contract opens the world to greater trading possibilities.
Welcome to Market Movers. I'm Jim Iuorio with Scott Martin.
Hi, Jim.
Okay, so starting Friday, there's the 7-day period of earnings season that is bank week. It's important. What do you think? Estimates have been dropped a little bit. How's it going to play out?
I think it's probably going to play out pretty well from the standpoint that you mentioned about estimates, Jim, because as we've seen in previous, say, earnings seasons, when estimates, granted, have been a little higher, estimates have usually been blown away to the upside. So I believe that things have maybe gotten a little too far negative. Therefore, this looks like a good setup to me. 2
earnings seasons ago, we saw some good earnings that were followed by small rallies and big hits. It happened more in tech than it did in banks. If we start to see something like that, is it going to mean a bigger drawdown as possible?
It might, but I think also given the fact that the Fed's still in play, we saw their commentary today about maybe being a little conflicted with respect to data, but not indicating they're going to make any moves, Jim. We still have the Fed in play, and therefore the ES is supported.
I agree. I think that the Fed is the biggest deal still here. Before we dive into our trade discussion, I'd like to point out these trades are examples, not recommendations or advice. Scott.
Yes, Jim. So talking about the Fed in play, talking about the markets and some interesting things that are out there. I actually think I found something very interesting in the ES today, Jim, that maybe plays into our theme there, talking about how the market seemed to have some nice support here from some breakout levels of recent note. So specifically, Jim, today, looking as an example of buying the week 3, April, 29.30, straight up, now tell me, call for 2.5 ticks.
Just a regular call.
Straight up call. Now, here's the thing, 2.5 ticks, I'm going to have to lay out some money. No, I'm not, because to pay for this, I'm going to sell a 2,800 put for approximately the same price, about 2.5 ticks. So I'm going to take in the premium I'm going to outlay to buy that call by selling that put. This trade expires on April 18th for both ends of that trade, okay, of that example. My gain here is unlimited in the sense that that call fills out and it goes above that 29.30 level. But also, though, I have the risk here of getting long the ES at 2,800 if I get it put to me if the ES is below 2,800 after April 18th.
So that's your risk then when you're looking to define the risk. If you're getting long at 2,800, but you're saying that if you are willing to accept that risk, and we're traders, we are sometimes long the ES futures. You would be long one contract being short at 2,800,
correct,
right?
And I like the shot that I'm taking here by selling that put just because of the upside potential.
I think it's a great way for long exposure, particularly because the call is 42 ticks above the market and the put is 88 ticks below the market. I think that's a pretty good risk.
And we got 10 days
reward.
away or so.
Yeah, I think it is a fairly conservative way to be long here. I'm looking at a different way, and actually another conservative way too, and it's something we haven't talked about here very much. It's call flight. So, as an example, I'm buying the week 3 April, the 29.10, 29.40, 29.70 call fly. I know we haven't done a call fly in the show before, but these are the kind of trades I do all the time, and actually have this one on from 4.25 ticks. So all it is you're buying the 29.10, 29.40 call spread, and then selling the 29.40, 29.70 call spread. Equal distant call spreads where the top strike of the one you own is the same as the bottom strike of the one you sold. So this trade begins to make its most as it goes through 29.10 up to 29.40, and it fills out the most.
Top end of that range,
so,
yes.
But all you ever risk, if it's an equal distant fly, is the money you put out. So it risks the $212 you paid, the 4.25 ticks, to make a potential $12.87. Now, those of us who trade flies before know to maximize that, it's kind of difficult to do because it has to be at 29.40 right at the time of expiration. But that's not really what we're going for. We're just going for the neighborhood in a fly.
No, true, neighborhood. It is a little space shuttle launchy, but that's okay because, Jim, first of all, the levels are very good because if you look at 29.40, that's right where I believe the market's going to struggle, basically near recent highs. Also, you know, the underlying at 28.88 makes it, I think, in my opinion, a nice outlook for a risk-reward perspective. We definitely got the sharpened pencils out on this one too, because I think you have to be creative though in today's market. Volatility is getting sucked out. We kind of have that upward sloping trending say line in the ES. To me, that's the way to express yourself.
Okay, change channels and talk about how to hedge. In less than a month from now, the CME is launching micro contracts on the 4 indexes: ES, NQ, Dow, and Russell 2000. Are you? First of all, you as fired up as I am about them, and 2, do you plan on using them to hedge option positions?
Yes, I may be fired up more for once, actually, right? If that's possible, because I like the size, I like the liquidity, certainly the capital commitment's very good, and for those that are looking to maybe get a little smaller, there's your exposure.
And I love when you have an option position on that all of a sudden is gaining deltas, and you look, well, I don't want to take it off, I like it, you can fine-tune it and drop a little deltas with some of the micros.
There you go.
Thank you for joining us on Market Movers. I'm Jim Iuorio, where we're hoping to make you a better trader.
Check out businessfirstam.com to find out where to see our entire show. And don't forget to like, follow, and share Business First AM.